Permission, I'll request them to please join us on stage now so we can begin the session. So ladies and gentlemen, I request everyone who is outside, if you can hear me, if you're interested in attending this session on financing agriculture value chains through collectives, please join us now. And we already have our speakers here. For those of you who are just joining us, please settle down as quickly as you can. And now I'll request all of you to please put your hands together and join me in welcoming the session moderator, Dr. G.R. Chintala, former chairman of NABARD. We are also being joined by Mr. S Bhatt, CEO of FWWB India, Mr. Anil Kumar, SG, founder and CEO of Samunnati Financial Intermediation and Services Private Limited, Mr. Alok Day, CEO of Foundation for Development of Rural Value Chains, Mr. Christudas, KV, CEO of ESAF, Multi-State Agro Cooperative Society, and Mr. S Balakrishnan, CEO of Vrutti. And before we start this panel discussion, we have a brief presentation on TRST Score, Human Risk Mitigation Platform by Mr. Sudhakar Raja, CEO of TRST Score. Let's welcome him with a round of applause as I invite him now to make his presentation. And post that, I will hand it over to Dr. Chintala to take the panel discussion forward. Please welcome, ladies and gentlemen, Mr. Sudhakar Raja.
Good afternoon, everybody. Thank you very much for giving me this opportunity to speak to you all. I wanted to make sure that we wanted to be able to present to all of you in the MFI industry. Thank you, Mr. Gigi, for partnering with us. It gives us immense pleasure to be a part of this ecosystem over here. Just to let you know what we do, my name is Sudhakar Raja. I was a former CTO of Shriram Group. I was in the US with Oracle and KPMG. That's my small little background. What do we do? Trust Score, TRST Score, the reason why there is no you in the trust, because there is no trust without you. So basically, we are like a credit score. Credit score helps you in financial risk mitigation. We look at human risk mitigation. What does that mean, right? So we are partners with FIDC. FIDC is the association for all the NBFCs. Sa-Dhan and NHRD, we are partnered with them, and VASME, which is the World Association for Retail, for small and medium-sized enterprises as well. So we want to look at risks from multiple angles. You must have all read in the news about this moonlighting issues. You must have heard about the money control article, which speaks about the fraud that gets committed by the employees. Rishad Premji has been very vocal about, the moonlighting issues. In fact, Infosys fired a few people for moonlighting. Wipro fired people for moonlighting, and there is a lot of other issues that were spoken about. The problem is even bigger, $800 billion. That's the amount of money that India loses because of human risks. 30% of companies go bankrupt because of human risks. 50% of resumes are fake according to Randstad, 30% of degrees are fake according to First Advantage. The cost of background verification by in itself is a large sum of money that the companies lose, if you like, right? So another big challenge, employees accept offer letters, don't join you in the last minute. Every time something like this happens, you're losing about ₹1 lakh besides lost cost of opportunity. Let me put it in numbers for you. Infosys loses about 5 crores just on this one small little problem, if you like, right? Just imagine this and extrapolate this across the board, and you will understand the enormity of the situation if you think about it, right? So again, Prashant Pitti spoke about it in ESMA trip, and people took to LinkedIn. There was a huge problem because of this issue, of course. And we always say this, even one instance of wrong hire can cause you lakhs and crores of money in losses, right? So I took this example of 30 crores, which was stolen by just 3 employees from a private financing company in Chennai as a classic case. So it's important that every person that you hire is critical to your organization, not only for its money, but also for the reputation that it holds ultimately, right? So this is why we come in Trust Score. So we want to look at a person from a 360-degree angle. We don't want to look at the person from just an employee angle or anything else. We want to look at them as a person, as a customer. So you're all lending, for example, as an agent. You work with self-help groups, for example, your interns, your students, your gig workers, your partners, your DSAs, outsourced contract workers. All of them have to come from a 360-degree angle. You cannot look at them in silos as an employee, as a customer, as something else. you cannot look at them as silos. You will have to look at them, just to give you an example, an Infosys employee is a borrower in a financial institution and vice versa. So if you want to look at them, you need to be able to look at them from a 360-degree angle. As Sa-Dhan, as a microfinance company, let's say somebody is committing a fraud as a customer, for example, you can also report them here, and that would basically help you in risk mitigate them when they try to borrow from somebody else and so on and so forth. And you can also start looking at analysis like, is there a absconding employee and borrowing? Is there a correlation between the two? We don't know. We're trying to get answers to all those kinds of things. We're going to try to make it a holistic approach to way we want to solve this problem, if you like. We start from all the way from offer giving all the way to the separation of the particular employee. We want to look at your borrowers, your insured, everybody else comes to the picture. We provide you with active notifications. If there is a problem, for example, you don't have to let me know. Let's say, for example, your employee, for example, committed a fraud elsewhere, and that company reports it, we will let you know and actively so that you can risk mitigate them in a bigger way. Like I said, $800 billion is the amount of money that gets lost. You need to be able to risk mitigate them in an effective way, ultimately. And the beauty is, it's all open platform. We provide you open APIs to integrate. We will work with your HRMS systems, your lending platforms, your CRM platforms. We will work with them. We will make your life simple. You will not be able to, we will interface with them. You will not have to move an inch in manual interfaces in any way, form, or fashion, ultimately. Everybody is a good person. Anything that gets reported reduces the score. Like I said, we also help you with background verification services if that is something that you wish to do, ultimately. So we also want to make sure your processes become efficient. Ultimately, today, the biggest challenge is, let's say, I'm calling you for a background verification. Ultimately, you are spending time in answering a question about an employee who has left your organization. Again, that's a waste of HR time if you think about it, right? Again, when somebody from your organization is borrowing money from a bank, again, the HRs are giving letters and so on and so forth, which is a wasteful HR time if you think about it. No more relieving letters, experience certificate. SK's Microfinance is a classic case of a company which had a big problem with its employees. So if you don't tag these people, unfortunately, you're going to have a virus that is going to spread across your entire organization. Like I said, a borrower elsewhere is also a customer of yours. So if you're lending to an SME and MSME, again, if there is a 30% chance of that company going bankrupt, again, you're going to have that problem as well. So we expect that all of you who are lending to SMEs and MSMEs to ask them to be a part of the platform as well so that you can risk mitigate them effectively. Sample screenshot of how a trust score looks like. We're trying to mimic the look and feel of a LinkedIn with a green tick mark. We're bringing in education, your certificates that you get. Everything else is going to be part of the platform. So you don't have to go elsewhere to verify and do all these things. It comes with you in a single platform. If the score is less, we'll tell you why the score is less so you can risk mitigate them in an effective fashion. Again, you can also send the offer letters through the platform. For companies which don't have an HRMS software, we're giving you a free HRMS software so that we can help you to get started with that particular information ultimately. You can exit the verified employees based upon this entire initiative as well, based upon which the score would come down ultimately. The major advantage is you can boost your brand image if you like, and that is going to help you to make sure that your customers look at you in a very, very good way. Fraudulent employees will come down dramatically, absconding employees will come down, current employee behavior will become better, cost of BGVs will come down, your frauds will come down dramatically, offer acceptance to join ratios will become better. These are some of the major advantages you're going to have. We are getting into predictive analysis, actionable insights, which are going to help you to do your stuff much better. Of course, it is in the code of conduct of the NBFCs and microfinance institutions. So to be as a part of our association, in fact, so as per the Sa-Dhan rules and as far as the FIDC as well, sharing data with us has become a code of conduct. So we expect that companies like you would support us and make sure that all of you are able to derive this benefit that we're offering you ultimately. These are some of the top customers: Hinduja LLM Finance, Star Health Insurance. We got insurance. We got about 20 NBFCs, 5 insurance companies, about 150 companies already sharing data with us. We are cross-platform. Like I said, we are not industry-specific. We're industry-agnostic, and we look at it from a very 360-degree angle. Ultimately, Mr. Satish Mehta, who is the founding CEO and MD of Sybil, is in my board. Mr. Sundaram Finance, former managing director, Mr. Srinivas Acharya, Shriram Capital MD, Saxo Bank, NHRD secretary. These are some of the people behind us. It's absolutely free. We're not charging any dime for right now, but for the next 2 years, we intend to keep it free. Any questions? If you have any questions, I'm happy to answer, but if not, I'll let the wonderful audience take over from there. Thank you.
Good afternoon to all. First of all, I am extremely thankful to the organizers, Sa-Dhan, GG, and also everyone, for giving me this opportunity to be with all of you. Though we are late by almost around 41 minutes, and we will extend it by 41 minutes. Though you all may be hungry, but at the same time, I'll assure you that you will not be disappointed. First of all, this particular topic is very, very important, and I'm extremely happy that Sa-Dhan had metamorphosed from a mere microfinance kind of a forum to a little broader kind of a thing, where this entire financing is happening or not happening. Now, having worked as chairman NABARD and also in the field for the past 37 years, and today in the last 4 months, actually I became more wiser when compared to when I was in the service. Because I am moving everywhere and I find the problems, particularly with regard to the finance. And it's not the collectives alone which are facing the problem. It is even the others are also facing the finance. Now actually, agri-value chain is a very, very, highly discussed term, least understood, and absolutely not practiced. Definitely, the people on the dais, actually they are making their own attempts to come to the rescue of this kind of a collectives to extend money, but still today I can say that we are absolutely at a very, very, I can say that if you have to put the decimals, it is after dot, it may be the 9 zeros, then subsequently things will happen. The kind of a scope which we have for financing the collectives through the agri finance, that is value chain finance, and the kind of a finance that is right now flowing into this one. So now we have a very great, maybe the panelists here, Mr. Balakrishnan from Vrutti. Actually, they are the ones who are promoting quite a lot of FPOs, and also they are into the consultancy and so many other things they do. And Mr. Christudas, actually ESAF is the one, despite being a microfinance, original microfinance organization, they are into a very big way into this entire FPO formation also, because when I was working in Bangalore, ESAF has done quite a lot, and also now they are into this financing. And Anil is the only one probably who is doing in a bigger way in this entire ocean of this agri-value chain finance, and also Alok Day. So now we have a great luminaries here sitting on the dais, but I will take maybe 3 to 4 minutes to put the context. Now, having said that it is least understood and absolutely not practiced, why I am telling is, from 2002 onwards, if you take the agricultural credit scenario, we have moved from almost 50,000 crores to close to around 18.5 lakh crores as an institutional finance that is flowing as a crop loan and also the term loan. Now the gross value added of agriculture had grown from close to around 1 lakh crores to right now it is around 45 to 50 lakh crores. So the gap between that GVA and the credit that is being extended is close to around 20 to 25,000 lakh crores. Now, what exactly is this one? Actually, who is filling this kind of a gap? Actually, now, very few people are aware. One of the reports finalized, where the NABARD was also part of it, actually they computed that it is a 10 lakh crores is the one which is a very gray area, which is not being attended to by anyone. Now, who is attending this one? It is the same players actually we have, because I am not saying that agri-value chain is something which we have discovered right now. Agri-value chain was there before, since historical times, and agri-value chain is there today and it will be there tomorrow also. But at the same time, what kind of a finesse you have brought to the financing of this agri-value chain? Because if you just look into that entire, the way the prices will go, or maybe the costing will happen, at the farmer level, if he is getting maybe something like 5 rupees for tomato, as the end customer you are buying it around 50 rupees. That means this 45 rupees is being taken by many people. And many times people say these 5 or 6 intermediaries in this entire thing. I will extend by another few minutes. So these intermediaries are making quite a lot of money. Actually, it is not true. Intermediaries are also making the same kind of a 10 or 12% return, not more than that, because they are paying quite a lot of interest to this kind of a financiers who are there within the system. So this agri value chain has got both the internal financiers and external financiers. Internal factors and external. So now the same money lender in the village can as well become an aggregator. He himself will finance, or a processor, or somebody will do it. Now, but the rates are exorbitant. Now, this is the place where so far not much of a thinking has been done. And why actually we have to now discover this agri value chain finance in a very big way when compared to the previous days. Earlier, farmers were all individuals. Our 140 million farmers were just producing, and they were at the mercy of the market, and somebody will come and buy it, and afterward that is the end of the story. Actually, he was not aware as to really who is adding the entire padding of the things and who is making the money, because for him that whatever the return he was getting is the ultimate. But today, having floated collectives in the name of FPOs, and also encouraging the farmers to come into this kind of a collectives so that these people will get a bigger share of that consumer pie. So that is where actually this agri value chain finance has become very, very important. Really, are these collectives getting that kind of an assistance from the institutions? Actually, absolutely no right now. Now, as I told that in the 10 lakh crores, which was estimated a few years back, 2 years back, only something like around 11,000 crores was being financed by NBFCs. And that too, if you do that, maybe data analytics of this entire NBFC is 11,000 crores. Close to around 9,000 crores was going only for the tractor financing, drip irrigation finance and other things. Actually, it was not that real agri value, it was only purely kind of an infrastructure finance. But why the institutions are not having this kind of a business sense to finance this one? What are the constraints? Are the farmer collectives not reliable? This is the first question. Even if they are reliable, are they capable of borrowing it? If they are capable, do they have the net worth? And if they have the net worth, whether the banker has got the ability to appraise them. Now, actually, these are the things which definitely, these are the questions which I have to know. Now, actually, in the last 4 months after my demitting the office, I was moving around many places, and actually, that many times, actually, I am not doing anything formal, but thing is, many people ask me to do the mentoring and pitching of that startups. And the same thing, whether it is the startup pitching or the collective pitching, it is one and the same. Both are really high and dry for the funds. Today, absolutely nobody is giving. That's what actually I was thinking. Somebody was asking me, why can't you start a venture debt fund and we will put money behind you, because nobody had understood this sector better than what you are speaking about. Now, that is where actually now I wonder, really, why at all we are not encashing this kind of a golden opportunity. Because today, that Indian agriculture is poised for a very, very, very big growth. Take the case of sugar sector. At one point of a time, everybody was condemning it. Today, actually, sugar exports are 43 rupees per kilo. And also that with the direct ethanol conversion, actually, absolutely sugarcane cultivation has become king. But where is that agri value chain financing the whole of this thing? Actually, many people have not come into this picture at all. Take the case of millets. Everywhere there is a big kind of a talk, but thing is, very few people are giving any kind of a money to that millet aggregation, processing, making the products, and ultimately taking it to the retailer and also to the consumer. Actually, very few people are doing it. Likewise, many startups are coming in a very, very big way to do so many things. But thing is, they are not having that kind of a bandwidth to do this kind of a thing. So now, microfinance and also this collective finance of agri-finance, actually, if you look into from that perch, actually they look same, because they are also the collective of women and these are the collective of farmers. But the difference is, here the farmers are having something, a collateral, because they have their own land. But at the same time, this agri-value chain finance should not look into this kind of a collaterals to do this one. They should look into that earnings and also the profitability of these enterprises, which these players are taking, because there are hundreds of players into this one, right from input suppliers to the aggregators at the ground level, and subsequently a kind of a logistic suppliers, then the final processors and the wholesalers and retailers, and besides that, the insurance and also other people who are supplying this kind of maybe supporting services. Now, all of them have to be done. Actually, everybody knows actually this is the kind of a thing that is available, but at the same time, nobody is making a very sincere attempt to disaggregate the whole of this thing and also dissect as to really actually how actually we can do this kind of a business, and really what is the profitability and what are the pitfalls and what are the things which you have to do. Now, take the case of Samunnati, because I know in the field, they have done maybe close to around 1,000 or 1,100 crores. And actually now, if I really go to the field, actually the same customer collective may not be going to the Samunnati second time, or sometimes they may be going as repeat customers. So actually now we have to look into it, really, why a particular customer is not going second, third or fourth time. And thing is, what are the constraints he is facing, and really what kind of a product specifications which actually Samunnati has done. Is it a product which is the die cast forever, or maybe is there any scope to renegotiate the product depending on the client's requirements? These are all the issues, I think, which we have to do it in a much bigger way. And that is how, when Gigi had offered me that, why can't you come, I thought that at least I should come and learn from the luminaries really what things are happening in the field and really how the things are going to take a shape. So now I will stop here, and again while concluding I will come back, but in the meantime I will now ask maybe the panelists to give their views for at least maybe 5 minutes each as to really what exactly is your understanding of the sector, and how we can do the things, and what are the pitfalls, and why actually we are not going in a big way when the scope is so big. Why we are not coming into such kind of a bigger business kind of a module. So I will start from left to me, that is from Alok Day. So 5 minutes time, I am putting an alarm. Thank you.
Thank you, sir. So I'll begin with talking about this thing, that definitely this is an opportune moment for all of us to discuss how we finance agri-value chain and actually take this whole initiatives that is happening around forward. And that's why Sa-Dhan deserves a lot of thanks from everyone here to take lead and start this discussion, because I think so far at this kind of discussion probably had not happened in this kind of magnitude. So I think let us look at some of the good things that is happening around, and why I'm talking that this is an opportune moment, because there's a big public investment that is happening in FPO sector. Be it MOA, Ministry of Agriculture, be it Ministry of Food Processing Industries, Ministry of RD, everybody has a portfolio of agri-value chain and promotion of FPO. Second thing is that we can see a lot of private investments are also coming up in agri-value chain. Even the startups, what Mr. Chintala has just said, that a lot of startups are also coming into and getting into food processing industry. And most importantly, we can see that export of agri-commodities is also growing in a very rapid pace. I think in the first half of the 22-23 financial year, it has grown by about 20%. So I think a lot of good things are happening. Now let us look at the challenges that we are facing right now in agri-value chain, because I would like to look at the agri-value chain as a whole rather than only talking about agri-value chain finance, because if we are talking about agri-value chain finance, we have to also see the whole thing, what Mr. Chintala repeatedly had been saying, investment. Like in SHG, he very clearly flagged in the previous session that per member investment is still at 15,000 rupees, which started even 10 years back. It has not really moved out to 50,000 per household. So similar kind of thing is also happening, that how we bring investment, but most importantly, how we ensure that all these FPOs are profitable, they are credit worthy, and their net worth is also growing. And as you all know that over the last 10-15 years, these FPOs are being promoted under various schemes, a lot of NGOs have done, but if you look at their health and all, it is not really very encouraging scenario. The Ajim Premji University has come up with a report, and they said very clearly that 70% of the FPOs which are promoted, they have only less than 1 lakh as their paid up capital, which is not really very encouraging number. Similarly, they have also said that almost 35% of the FPOs which are getting promoted in the last 5 years, they are written off in the ROC's books. So they are not really, they are defunct. So now the challenge is that how we capitalize on all these positive developments in the larger ecosystem, and how we actually leverage all these developments for the well-being of the farmers, so they have larger share of consumer rupee. We know that this is very strong thing. What Dr. Kurian had started talking about more than 60 years back, that farmers should get the larger percentage of consumer rupee, and in dairy, he kind of ensured that 80% of the consumer rupee goes back to the farmer. So we have to also have such kind of large target in our mind. And we have got all the examples and probably learnings from the experience of Dr. Kurian, what he did in dairy sector, and probably to some extent Dr. B.V. Rao, what he did in poultry sector. Both these sectors are actually a large sector, and if you look at overall growth of agri sector, what is happening in GVA, a large percentage of that come from dairy and poultry sector, meat sector, and fishery sector is also coming up. So we have to see that, how we translate those learnings into agri-commodity. Basically, I am talking about staples, fruit and vegetables kind of sectors. And that, if we have to really do this kind of work where the benefit goes back to the farmer, and as you all know, 85% of the farmers are small and marginal holders, that's a much, much larger challenge to reaching out to all, having 2 acres, 3 acres kind of land holding. So we have to actually bring that kind of transformative changes, and to do that, we need to focus. That's why I said that we need to look at the whole system in a much more larger extent, means human resources, the finance, investment, risk fund, and definitely the execution skills. So these are the 4 or 5 areas, and human resource actually will be extremely important because they will bring the execution skill. Their quality of human resources will ensure that the profitability of the FPOs. And we have to also realize the collectives are ultimately a business organization. They have to make money to pass on the benefit to their member farmer. And therefore, I will suggest that we need to look at building a support ecosystem also for the FPOs, like NGOs who are into this mobilization for a long time, the academic institutions, but most importantly, the financial institutions and technology, how we can bring technology and financial institutions. And from our experience, you see, we are an organization which started in 2019, but we actually started operating from 2020, which actually emanated from the experience of Ministry of RD when I was part of that initiative that time, when we started supporting FPO promotion, but the paradigm was a little different. We thought that we have to actually have a minimum size and scale to make these producer companies a viable entity. Small investment, small size, probably will not be able to withstand the kind of pressure in the current market system. We started this, and the most important point again, where to realize that how we finance it. So the paradigm that we built, that if we are financing a producer company, it has to be an end-to-end financing. Means you finance in their manpower, you finance in partly in the working capital, you finance in their infrastructure for value addition, as well as capacity building. And all these things require much higher order human capacity, and probably FDRVC, our organization, was started with that objective, that how we bring that higher order manpower support, human resource support, will be able to develop the business plan of FPO. They'll be able to actually do the entire execution work till the market linkages. And most of our guys are actually therefore coming from business organizations. But one important thing I'll request here, that we need to create a risk capital, because we can't expect that a FPO with 1,000, 2,000 members will be able to generate so much of share capital, which will be the main source of that risk capital in this system. So, and because this FPO by design, it cannot really get funding from open market or venture capitalist. So this is one area I will urge everybody to look into. And all these things, I mean, we have to have a kind of vision for this, what I think Mr. C.S. Reddy also told in the other room, that we have to build a vision for FPOs also, with a very clear objective, how we make it profitable, which will also include a lot of, overall consultations like this. And maybe a working group also can be formed. Even Sa-Dhan has taken the initiative, so they can also take this initiative, how we take this forward. A roadmap is very, very important to make these producer companies profitable and sustainable. So that much from me, sir.
Thank you, Alok. Very valid points you are right. Now I'll request the biggest practitioner in the market, the agri value chain finance, Anil.
Good afternoon, everyone. It's wonderful to be here in Sa-Dhan conference after a long time. Thanks to Gigi sir for inviting us to both the conference as well as to this panel. Well, what I heard Dr. Chintala mentioning and Alok sir mentioning, I couldn't have asked for better words of intro and the follow-on conversations, because we are the practitioners on the ground, and when we see the reality, it's nothing short of what they have actually mentioned. Sir, I wish if we had a magic wand, if we can fast forward this, 4 months prior to your tenure, we could have seen a better India, is what I would say. So if there is a way where we hijack the future chairmen, take them to the field, let them spend, like how kings used to go in disguise to know what's the reality on the ground and come back and then say, hey, this is what it is. We blundered into the FPO world, I would say, accidentally, right? We did not plan to be in FPO space. We started off with the value chain approach, thanks to the insights that my previous organization gave me, IFMR, to understand the dynamics of a household from the income, expenditure, assets, liabilities, and their long-term goals, and how do you map the financial products to their aspirations. We started realizing that these households are not operating in vacuum, they are operating in an ecosystem dominated by 2-3 major value chains, and agri value chains are an important dimension. So how do you work in the value chain space to be able to positively impact the households is how we got into the value chain financing. And when we started understanding the dimension of internal player and the external players that you mentioned was obvious there. The middlemen were not making money. They were the lenders of last resort. They were the market makers. They were the absorbers of the price fluctuations to a reasonable extent, and managing the cash flows between the producers and the rest of the markets, the middlemen. The problem that we realized is not with the middlemen being there, but with the equilibrium that the value chains have gotten into, the lower equilibrium. Not much was moving, and one biggest constraint that we understood, again, as mentioned by him, within 3-4 months of his field visits, is paucity of working capital. The buyer wants to pay later, the seller wants money immediately, and it is a norm in all the supply chain or value chain structures. But what it makes acute in agriculture is because everything happens in a small window. So how do you customize the working capital structure so that the agri value chains operate at a higher equilibrium is a starting point for Samunnati to be doing what we are doing. Having understood the role of the intermediary and looking at moving to geographies beyond Tiruvannamalai, Tamil Nadu, where we were working, is where we realized the power of collectivization through societies. Doodh Utpadak Sanghs in Gujarat, and that's how I understood the FPO as a dimension. And it was 2015. 2 people that I reached out to, and within 30 minutes of reaching out to them, both of them validated that looking at FPO, this was in 2015, ladies and gentlemen, not 2019 when 10,000 FPOs got announced. 2015 when hardly anyone knew about FPOs. One is Vijay ma'am from FWWB Ananya at that point in time, and second one was Girija ma'am. Both of them said, Anil, FPO would be the future, go ahead and see what can be done. Right. That's the power of people, in civil society organizations where they spend significant of their time in going to the field and understanding what the ground realities are. So we gotten into the FPO world as a lender, and then started realizing that lending alone would not help, because market linkages are an important dimension, and it is not to help them. I somehow don't like the word help when you are working with the client segment. It's not about lending, but how do you de-risk the lending through market linkages is how we got into the market linkages and set up another subsidiary called Samunnati Agro Solutions. Now this is a client segment that we are working, and we are putting our risk capital. Mind you, we even now don't get grants. We don't get significant bank funding. We are grateful to State Bank of India, where we have started working as a co-lending partner in the FPO world, and the partnership has gone live, which has given us a hope that we can indeed bring down the cost of lending to the FPOs. But then I'll fast forward. I know we are between lunch and you. I'll fast forward. The idea of an integrated player in the agri value chains is what Samunnati realized would add value to engaging with the FPOs, because everybody knows there is potential. Because the first question that was given to us as part of the panel was, do you see the potential? That's a moot point now. Everybody knows that there is a potential. How do you unlock the potential? And the only way to unlock the potential is observe how the internal players in the value chain, how the informal players in the agri ecosystem are operating, and they are operating as partners. They are not operating as transactional entities. They are not operating as lenders and borrowers. They are operating as partners. Partners means understand the requirement, have a customized structure, whether it is lending, whether it is market linkages, it is market linkages, whether it is capacity building, then get into capacity building. And in our view, capacity building is not just required for FPOs. Capacity building actually is required more for the institutional players who are looking at getting into the FPO world now. Right? That is more, more need of the hour, I would say, because people can't underwrite a company that is in a cooperative structure. How do you assess the risk of an entity where the incentives are aligned around the social capital and not around the collateral and around the balance sheet and transaction history? You don't have that structure, right? And how do you make the risk capital flow? There are, of course, hosts of schemes that the Government of India and other nodal agencies have come about, but that addresses only one part of the FPO journey. The FPOs need a comprehensive engagement, as Alok rightfully mentioned. You cannot just handle FPO in piecemeal. From the input all the way to their institution capacity building, from managing their procurement all the way to managing the aspirations of their members. And this cannot be done by one institution. The only way this can be done is when all like-minded and right-intentioned people come together, and that's where the FPO world today needs an orchestrator, a Zubin Mehta kind of a person who makes each one of us play what we are good at and collaborate with only one objective of, can we make FPOs sustainable institutions? And can we have the bright examples that we have seen in the microfinance world now, after 15, 20 years of hard work by many people in this room and many people in this conference? We are seeing a sector which is about 3.5 lakh crore. Can we aspire to have microfinance as one of those sectors? And for that, private risk capital has to move in. And for private risk capital to move in, you have to have a sustainable business model. For sustainable business model to move in, you have to show that there is money to be made. And for money to be made, private players will have to be there. Grants, support, soft money can only give crutches. Can we have a Usain Bolt or a Jesse Owens on crutches? No, you cannot. Private funding has to come in, and that can happen only when we as ecosystem player come together, is what I strongly believe. And the last point on millets that you mentioned, so there is a lot of rhetoric, no doubt about it. But I was surprised to know that millets cannot be stored and a warehouse receipt financing can be taken on millets. And millets is one grain where you have to store as a grain. The moment you convert into flour, its shelf life goes down. So you have to store it as grain. So how do you manage the nuances of each of the value chains in agriculture when the people who are supposed to provide the lubricant, which is the working capital, look at everything from the debit credit dimension? That would be the biggest challenge that we players in the agri ecosystem, specific to the agri value chains, will have to deal with it. And couldn't have asked for better set of people discussing this and better set of people dealing with this great opportunity that all of us are looking at. So I pause here. Wonderful to be here again, and looking forward to many sessions in Sa-Dhan on FPO world in the subsequent years. Thank you.
Thank you, Anil. It's very nice. You have put the great criteria. Now I will ask Christudas, you see, because they are also into the biggest kind of FPO promotion, and also they give the money.
Good afternoon, and I know that I am standing here between this session and the lunch, so I will go quickly across my points for your consideration. see the value chain actually starts from the producer and ends in consumer. It's a chain that travels from the consumer to the producer. For the consumer, the concern is viability. The producer, the concern is viability. And for the consumer, the concern is affordability. So recently I came across a product that is vacuum dried fruits and jackfruit, for example. 50 gram cost 160 rupees in Amazon. So you can imagine how affordable it is to people like me. If it, 1 kg, how price it will be. So the affordability on one end and viability on other end. This is the two very complicated, sensitive points that the value chain try to, bridge. And for the value chain to come up, technology must be there. Then the market and also the institutions to hold and, carry the value chain and all the things forward. And we have all these things in our country and across the globe, across the world. This is done pretty well. And that India is the largest producer of food crops. India is the largest consumer of food crops. And we are a producer hub. We are a consumer hub. But our footprint in processing, value addition is very meager. We are yet to know as a processing hub. That is the problem that we are facing in our country. We have a large population. We are heading to 1.7 billion. So it's a whooping population. Lot of market is here. So none of our farmers need to be marginalized. None of our farmers need to be, tasting hunger and poverty, because there is a huge market for the agri-commodities. And all what we wear, even what we eat, and everything has the agri inside. Even the coat, the blazer, the shirt, whatever we wear, agri inside. The chemicals, most of the medicine, agri inside. So agriculture has a wide variety of application and relevance and importance, and it is a very critical component in our daily life. Yet our farmers, they face lot of difficulty. Therefore, as an organization that has served the poor and the marginalized for the last 3 decades and loved them very much, and have seen our services, not our organization, the sector services, this small finance or whatever it is, has impacted the lives of the poor. We are the people. We think about the people inside. When the value chain, where are the people? Value chain can be there even without any consideration of the small and marginalized farmers. We need only produce. We can have produce, but we are thinking of the people. Where are the people? What will happen to the people? So value chain, as we think in the present context, we should also consider inclusion as a great strategy. How can we include the poor and marginalized farmers into the value chain? How can they benefit directly from the value chain enhancement? So we know that small finance is a great finance as far as the farmers are concerned. They need small finance. Small farmers need only small finance. They don't need big finance to stay in the work. They need some finance when they have to buy some input. They need to pay the labor and small finance now and then, so that they can carry out the crop. They can comfortably do the cropping cycle perfectly well. And also the warehousing. We have come across the farmers, they are not ready to give their product in the warehouses, because the warehouse guys will give only 70% of the price. They not, even if you give me less, give us 100%. That is the mentality of the poor farmers. So they are not cooperating. Their producers are not willing to send the produce to the warehouses. So therefore, warehousing financing is also available. So most of the farmers are untouched. They are not willing to even consider that one. So only what we can do, we can give them small finance during that time, so that at least some of their stock can be, sent to the warehousing. And they enable the unenabled. So we have to enable them to think through and mainstream the marginalized. Another aspect is the gender bias. In the agriculture, there is a huge gender bias. See, most of the agriculture activities, women are really participating. But the land title deeds, etc., are in the for the men. So we are not able to give loans to women, most of the loans, because the deed and everything, the title deed documents, everything in the names in the name of the men flock. So there is a gender bias that is very prevalent in the agriculture space, especially among the poor and the marginalized farmers. So therefore, we have to work in that ecosystem. So what we have done is looking at the sector, having served the community, having felt the need of them. So we have some small finance packages, and it is proving quite well. So we have an agri, group loans, and we also form agri groups, agriculture group, FIGs. We have taken that concept from the classic, producer company concept of farmer interest group. So we adopted that scheme into our loan credit product scheme also, so that we form FIGs and give group loans to the farmers. So this is an exciting experience for the farmers also. They like it, and there is a huge demand for this product across the market. So our portfolio is growing. What we see is there is a demand. And when there is a demand, it's an opportunity for capacity building. It's an opportunity for serving the poor farmers, making them as strong collectives. So now we form the collectives to register an FPO. But, so that is the pull factor. Strong, form the collective, somehow in 1 month, register the FPO. It's a half-cooked one. But when there is another, natural, pull factor like credit, they want to, they will spin around credit, the access of credit, then that can be a collective, farmer collective, that can be a solid farmer collective, that can be, made to survive, continually servicing them with the small credits. So there is an FIG-based loan product that is doing well, so that farmers are, they can buy a cattle, or they can do small enterprises. They can also go for good.
You have half minute more.
Yeah. So they can also take up input materials at the right time. So these will help them to stay in market, stay in job, so that their producers can be, sent to the value chain procurement agencies. So serving the people, getting the farmers onboarded into the value chain, making them enabled to harvest the benefits of the value chain that is developing at a fast rate, that ESAF actually does in this space. Thank you very much.
Thank you, Christudas. Very valid points, you are right. Now I request Balakrishnan.
Hello, good afternoon, everyone. Thank you, Sa-Dhan and the team for inviting us to be part of this wonderful event. We at Vrutti, the understanding of the value chain, I think all of us, we know that the value chain in the country is about, the financing is happening at the different nodes currently, because we give it for production, we give it for buying inputs, or we give it for any of the infrastructure. But the challenge is that there is no definite objective to work in the value chain. There is no comprehensive intervention, the financing facility available to establish any value chain. That's how it is about the piecemeal basis. That's what it's happening. And as an organization, we also started, because it's also risk-taking ability of the facilitating organization, and also the risk appetite at the producer collective as well, because we don't have the capital or the all the risk or underwriting someone available to actually, you can actually move up in the value chain. That's a challenge where the most of the intervention which we have done so far about largely for inputs and output marketing, which is about 35 crores of pumping we have done with about 40,000 farmers. That's in about 6 states which we worked. The currently what we are looking at it, I think what the understanding, the learning has come from these interventions are, is that I think until you work on the comprehensive end-to-end value chain approach, we are not creating any significant impact at the farmers level. What I think Alok they was mentioning about the 80% of the consumer pie going back to the farmers in the Amul model, I think at least in agriculture, can we do something 50%? We don't need to, at least if we do that, then if you have to do, then you have to work on the comprehensive, the end-to-end, and which intervention can actually pay back to that farmer about the 50% of the income. Yeah, the consumer pie going back. That's where we are moving in currently. But for that also we felt, and we are as a group, we are looking at it, I think the ability to take risk and then manage the business, the capabilities within the producer collective and within the facilitating organization and the FPO seems to be very, very limited. I think we have to accept the fact. Because of that, I think we could not able to see that the value chains are getting established. You can see that there is a processing unit, the small dal mill, which is because you got a grant for 10 lakhs or 15 lakhs or 50 lakhs, you are confined with that because you don't have the ability to take risk. We are looking at it moving forward. Can we have a joint venture or the special purpose vehicle where the corporates, or how do we unleash the potential for both the producer collective and the corporate? If you do, because the corporates, they are into this business for about many, many years, they know that how to run the business. They know that how to take the risk. But can we join? But we know it how to work with farmers. We know that how to improve the productivity, or how to aggregate, or how do I collectivize them? Can I supply the quality of produce? That's how we are looking at it. Can we blend the both world and then come together, create a special purpose vehicle? Then you are able to create that impact, the significant impact at the farmer level. That's a roadmap, and then we are into discussion with multiple corporates currently. We will be going forward into multiple value chain. And we also believe that I think every cluster where we work with the producers, I think you need to choose about, it's not only agriculture, we are also looking at allied value chain, and also we are looking at non-farm. Because I think every household manage their income sources from the multiple income sources. When we work with it only in the crop, you cannot, when anything happens to that, because we are seeing it today, the climate change, the impact is huge. Every farmer get the hit on that. Then can we look at multiple source of income for every farming family? And then that also we are looking at the value chain approach. When we look at the crop as a value chain from end to end, and then looking at the allied, which is about milch animal or sheep or poultry or fishery, anything. It depends on each region, the context, which can we look at. And then non-farm as well, which we also collaborated with the other partner, where we also worked on the bamboo baskets or the banana bark baskets. Likewise, we are also looking at it. I think the essence which I wanted to communicate is that I think can we look at the special purpose vehicle, and where you also bring in, which is equity, which is also grant, which is also look at debt, and also you need a risk guarantee mechanism as well. All these needs to be blended. I think you need a blended financing to make this value chain work. Otherwise, I don't see what we are actually dreaming today, creating n number of FPOs in the country. We want to create doubling farmers' income, or I don't see it going to be a reality. Until we work on this comprehensive approach, we won't be able to make it happen. Thank you for this opportunity. That's all I wanted to communicate. Thank you.
Thank you. Thank you, Balakrishnan. You have put the perspective in a much, with a lot of clarity. So, we are now at 1:54, so we will be there up to around 2:05. So another 10 minutes. So now, we have quite a lot of an insight was given by all the four speakers. Now I just want to ask each of them a small kind of thing. Exactly, because what exactly you feel that is creating a value chain means what for your organization? Is it a business improvement, or maybe plowing back the profits to the farmers, or trying to create the products? Alok?
I think that's a very good point you have just made. I think we have to look at it both ways. In the sense, it's chicken and egg problem. If the producer company doesn't have business, it can't make money and it cannot really pass on the benefit to the farmers. At the same time, if the farmers don't see benefit, they'll never be part of the FPO for a longer term. They don't see the association. like, they don't see FPO as a partner, what Mr. Anil Kumar just said. It is a very, very critical point at the village level. The village level aggregators are partners of the community rather than a, transactional piece. I think that we have to realize. So I think if we have to, again, I'll come back to what I said earlier also, that we have to look at it much more comprehensive manner, and we have to create that USP or value proposition for each of the stakeholders. Means for the farmer, there has to be something there. For the buyer, I tell you, I have a lot of friends who work in the corporate and in the commodity business. When I go to them and try to connect our FPOs with them, they said, you see, I cannot commit anything. Only when I see money for our company, then only I'll come to you. So they don't have any such larger, lofty ideas. They are there to make money, and they will be driving that. But how we create also value for them so that they can come to us, because we have also supplied to Flipkart and many companies. They are coming back to us because the kind of quality they see that, okay, fine, if we want to this kind of quality, so we have to go to this FPO. So we have to create value proposition for the buyers, the farmers, and everybody.
Now to Anil, maybe extending the same question, that now you are already having a portfolio of around maybe 1,000 or maybe 1,500 crores kind of a thing. But probably maybe your products may not be having the same impact across various geographies. Actually, you are basically, because now entire, whether it is microfinance, FPO finance, it is a south-based phenomenon when compared to the north-based phenomenon. Even though there are few FPOs which are successful in north, they are absolutely gasping for free because of that, they don't have the kind of a finance which they are getting. So now actually, do you think that there should be a customization of the products for the various geographies? And also various social groups. Now actually the product which can be there for apple in Himachal or Kashmir definitely will not work somewhere else, because there the take care of system, how the things are happening. Likewise, and also that mostly everybody talks about the moment it is a value chain finance, it is the Amol model. Actually Amol is not a model for this kind of a thing, because that product is like that. Earlier also 10 years back I told that milk is not an agricultural produce in the way it is, because milk is perishable the moment it is milk. So now actually you have to have some kind of a mechanism to preserve it, add value and supply to the ultimate consumer. But in case of agricultural produce, it is not the case. As you are telling millets, you can harvest millets and you can store as a millet, but thing is really what kind of thing? In case if they are not getting any kind of a finance for this kind of a thing, really how they are going to sustain? Because most of the millet farmers are small farmers. Take the case of Rajasthan, take the case of parts of UP, Bundelkhand, Madhya Pradesh, or maybe Chhattisgarh. All these people are the millet growing, or Karnataka, Northern Karnataka. Now these are the areas where the maximum number of poor farmers or small farmers are there. And we are not able to create value to that. So do you feel that we really should customize some products?
Without doubt, sir. Without doubt. One size does not fit in the same value chains as well. Right? Not just different value chains, because agriculture is a sector all of us know. What works in one value chain in a particular geography does not work in the same value chain in another geography. So customization is imperative when you are working in the value chains. Having said that, I must confess that our own understanding of this space is evolving. Right? Because it has been like peeling off an onion for us. Every step is teaching us that there is something else for us to learn. But the only solace that we have is, squint is better than blind. Not doing and sitting and talking does not help. Why don't we start doing something and keep learning and blunder our way with the risk capital that we have, right? I was actually in Northeast last week, and that was my first visit to Northeast. We went to Meghalaya, and we realized that there is a beautiful value chain in Arekanat. And that Arekanat value chain is where the farmers or the collectives, the village cooperative societies, IVCS as they are called, which are recognized as FPOs now apparently, they come to Assam to buy the Arekanat, ferment and sell it back to the same vendor after 3 months with a markup of about 60 to 70%. This is all what we have heard, right? 15 lakhs is the working capital required to buy the raw Arekanat, and it has to be in cash, no credit given by the trader. The same guy guys back at 25 lakhs, so you make 10 lakhs. And these people don't have access to 15 lakhs. And what they require is a 15 lakh per truck for 3 months, and then, the transportation. And while we were talking, they basically said that, rate of interest is an issue. So we said, okay, let's calculate. What is the rate at which you are looking at? 10%. What is the rate that Samunnati can give? 18%. The difference is 8%. So let's do the math. 15 lakhs into 3 months into 10% divided by 12, because it's number of, it's about 37,500. 18% with the same math is 67,500. The difference is 30,000 rupees. For this 30,000 rupees, you are basically letting go even 10 lakhs gross margin chhod dete. Even if it is 3 lakhs, you are getting 10 times more. So I feel the capacity building is not at an entity level or at a farmer level. In value chain structures, when you are customizing the dimension, this is where the idea of SPV is so powerful, that you are aligning the incentives of all the players in a way where the benefits will accrue. And that customization is an important customization that we have to bring in different value chains for sure, even in the same value chains in different geographies for sure, because finally what is an FPO that is bringing to the table? 2 capitals. Social capital, which is familiarity of their members. Trade capital, because they have the transaction history, current and capable to generate. If these 2 are there, then rest of it can be customized to suit their requirements. So Samunnati's engagement ranges from 1 day to 5 years. Quantum ranges from 5,000 rupees to 20 crores. So we are not microfinance from that dimension.
Thank you. So now, extending the same argument, now SPV, actually everybody is talking about, but the thing is, how many SPVs are successful? It's a very, very dicey question. And second thing is, if you as a financier, you create your own SPV and you are now trying to lend the money, you are trying to procure the produce, you are trying to, actually you are almost doing the monopolistic kind of a trade. And thing is, as such, there is a kind of a criticism that probably maybe small finance banks, NBFCs are charging more. Now that is one part is the interest for the core product, and the second thing is with regard to this SP which you are creating in the process. Actually you are lending, procuring the things, and again you are having margin. So now, Christudas, I want to ask really whether is it a wise move to the SFBs or NBFCs to float an SPV separately for doing this kind of a finance, or you should have a collaboration with the other institutions which are having such kind of a thing, so that one is you are de-risking and second thing you are not having any.
Yeah, see, in India we know that 70% of the farmers are marginalized, small and marginalized. So when we have a topic of consideration with Agri, these people are very important and critical. So the microfinance or the small finance, small finance space is very unique, and it is a sector, and the banks also have come up with a differentiated banks for small finance banks. The regulators also understood the relevance of this. So that sector should have a special vehicle, because most of the, there is a lot of credit available in the country for value chain enhancements. But unfortunately, most of the small FPOs and the farmers are not able to avail that. That is a problem. There is a credit, they are not that bankable or credit worthy, or they don't have the capacity to understand the program. So therefore, there should be a special purpose vehicle exclusively for this sector will be very ideal to take care of these concerns. That is how as a sector it can grow. So the marginalized farmers, that typical, what are they? Understanding that a special purpose vehicle will be very good. At the same time, and the microfinance sector has come out with a lot of partnerships. So we have learned, in a big stage like this, where diversified views and opportunities are made available. So please don't shut our opportunity for networking with other organizations as well. So I support both the opportunities.
Thank you. So now lastly, Balakrishnan, that de-risking everybody talks about. Now the co-lending is one part of it, because actually you are putting 20%, 80%. But at the same time, you have maybe the other institutions like CGT, MSc, NABARD, and others. really how far actually that these kind of institutions are going to propel the growth of value chain finance? Do you see that, I mean, really how actually this kind of thing can happen?
Yeah, I think initially you also mentioned, I think, what is the opportunity in this sector itself? When I was also in the, I think before the session started, we were talking to Mr. Anil that how, I think the value chain financing is happening in isolation. How these entities, financial institutes, NBFCs can actually look at unblocking or how do we kind of de-risk, bringing in many players in the ecosystem. And each one has strength. I think today in this world, I think without collaboration, nothing can actually happen. I think if we are not joining together, because if we compete with each other, I don't think we can succeed. I don't think so. We need to come together to, I think, all the financial institutes, and then because each of us will bring in different kind of products, different strengths, and with the ecosystem also, we need to bring in more players who are all like-minded or who is willing or who is interested in establishing the various value chains. Then I think we'll be able to scale up, and there is a financing uptake also will increase. Until that, this isolation, because the strength of the FPOs, if we build something, I think it might fall. That's what it is shown, the reports of APP, what do you call, Ajim Premji, the professors, they did a study. All the 50-60% of the FPO, they're not functioning at all. I think it's all in the paper. No, not like it's not only I'm saying about what I have promoted also, it is many have died today. Means, because when you leave them, they are not there. Because they are not able to manage themselves, or they are not able to understand what's happening in the ecosystem to withstand and thrive themselves. I think you need people, professional partnership, and also various people coming together and playing on the strength.
Thank you. So now we have come to the last 3-4 minutes of the thing. So I will take. Now, because we heard quite a lot, and most of the viewers, that we can do later, because now other people are hungry, including myself. Yeah, please.
So, as we are talking about FPOs funding, I'm actually Alok from, I take care of product at Insurance Microfinance Bank. I've been trying to get a product in terms of FPO funding. I was understanding from panel members, FPOs need funding. However, on the other side, there is lack of financials, which we as a bank we want. Security, what it should be. So, RBI has a framework for KCC funding. So, can we have a broader construct in terms of FPO funding, as we see different entities having a different approach. So, for we as a product manager, we get a broader outlook of FPO funding. Can that be a uniform approach for different value chain altogether?
True. Actually, it's very nice because having gone, as I was telling in the beginning itself, whether the existing products are able to meet the requirements. Absolutely not. And thing is whether you require a regulator's permission to devise a new product. This is the thing. Now today, if you look into the entire agri value chain financing, it's happening as a kind of a commercial lending without having a tag of agri value chain finance, and that is not qualifying under that priority sector lending. So now the thing is there is a supply side, that is the FPOs are being formed, like close to 15 to 16,000 FPOs are there right now, and of which I can safely say that at least 50% are not in any kind of an investment grade. Remaining 50% may be there, but thing is what is the business size? Actually some of them are between 5 lakhs to 25 crores. Actually this is the kind of, but at the same time, the demand side, actually the demand for the products given by the FPOs, many people are willing to buy. But at the same time, the gap in between, the grey area where you are creating FPOs and you are, the products have got a market, but in between this grey area, nobody is looking into it. And that is where, as I told, the gap is somewhere around 10 to 20 lakh crores. And where we do not have the products which are fitting into this kind of FPO. And also the other thing is with regard to the fail-safe mechanism, because now as you are telling that now you want to give the money to the FPOs, but at the same time you are not sure whether they are having that kind of inherent strength and capability, because there is nothing to prove on the paper. But if you have a fail-safe mechanism by way of insurance, by way of any other thing, and so this also one has to look into it very closely. Like NAB Samrakshan gives up to 2 crores, a kind of a guarantee, 75% of it is guaranteed at the minimal fees. And likewise, maybe some other agency may come at a later date. In case if you really do such kind of a things, it will come. But now today I will say that it is not like SHG movement. SHG movement is beautiful out and out for the poverty alleviation. And the FPO movement is out and out for the value creation to the farmer, value creation to the agriculture as a sector, and value creation to the whole of the community, because close to 70% of the people still stay in villages, and maybe the entire village economy revolves around agriculture, practiced by 1/5 of the population. Now the entire economy. So if that is the case, unless the sector is addressed properly with the kind of a products which they want at the right time, right place, and also at the right interest rates, I think we will not be able to make much of the headway. So now this kind of a policy dialogue has to be taken to a much wider kind of a thing, as to really how every player, whether it is big or small, include, because the player here starts from the farmer, then subsequently everyone else, and the financiers, insurers, maybe the processors, exporters, everything. And the product has to be designed in such a way that actually it meets the requirements of everyone and adds value to them. That is how actually I visualize, having seen this one from a little higher level and seen the agriculture for quite some time. And I wish that this kind of a policy forums will throw up some kind of a discussion in future, and in the next Sa-Dhan conference I think we will be a little more wiser than what we are today. And thank you all for being very patient, and we have really taken exactly 1 hour 10 minutes from the time we started, and I hope that you are not bored. Thank you once again.
Well, thank you very much. With that, we conclude this session. And of course, we were not bored. And I'm sure everyone in the audience would agree with us that it was a very interesting and interactive session. Thank you once again, Dr. Chintala, for having moderated it so flawlessly. And I'll request you now to kindly present mementos on behalf of all of us here at Sa-Dhan to each one of our expert panelists here for sharing with us those valuable insights. I invite Dr. Shankar Pandey, Director BIRD, to please present a memento to Dr. Chintala and thank him for being such a wonderful moderator. Also, if I can request Mr. Sudhakar Raja to join us once again, and I'll request you, Sudhakar Raja, for his presentation on TRST score. I request Dr. Pandey to also present a memento to Mr. Sudhakar Raja. All right, with that, we come to a close of this session. I'm afraid we are once again running behind schedule, but we have only half an hour for lunch. The lunch is right outside this hall where we all had our lunch yesterday. Please take 30 minutes and join us back in Sovereign Hall for a brief presentation next on FinHeart, redefining distribution of financial services to India beyond the metros. Thank you. Please join us for lunch.